Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering how the filing and payment extension affects the June 15th prepayment deadline for the pass-through entity elective tax. We'll be covering the pass-through entity tax in detail in Spidell's 2023 Summer Tax webinar, which starts on July 11th and covers partnership and S-corporation issues. You can see a full list of topics and get registered at caltax.com under webinars. In a normal year, June 15th is an important payment deadline for LLCs and other pass-through entities, but 2023 has been anything but normal for most California taxpayers because of the filing and payment postponements related to various winter storms. Any taxpayer who resides in, whose principal place of business is located in, or whose tax professional is in any of the California counties affected by the winter storms has until October 16, 2023 to file and pay most types of federal and California tax obligations. Currently, this postponement applies to all California counties except for Lassen and Shasta counties. The postponement applies to all payments scheduled for or payments due with tax returns that were originally due on or after the disaster beginning date for the affected county and before October 16, 2023. This means interest and penalties will not be imposed on these payments because the original due date is now considered October 16, 2023. The postponement deadline for Modoc County is August 15, 2023. This includes but is not limited to the following payments that would normally be due on June 15th: the 2023 prepayment of the pass-through entity elective tax and the 2023 estimated LLC gross receipts fee. Under California's pass-through entity elective tax provisions, a qualified S-corporation, partnership, or LLC taxed as a partnership or S-corporation can elect to pay a pass-through entity tax equal to 9.3% of its qualified net income. This tax decreases the federal net income included on the owner's K-1 as a workaround to the $10,000 state and local tax limitation. California also allows the entity's consenting individual, estate, trust, and certain single-member LLC owners to claim a credit on their California return of up to 100% of the tax paid on their behalf. For the 2022 through 2025 taxable years, to be eligible to make the election, the pass-through entity is required to make a prepayment of the tax by June 15th of the current year equal to the greater of 50% of the elective tax for the prior year, or $1,000. There are no exceptions to the 50% of prior year tax requirement for the June 15th payment. So if a taxpayer underpays the 50% amount because they did not correctly estimate the amount that would be actually due, they are ineligible. This is true even if the amount underpaid is a de minimis amount. The FTB has no authority to change this 50% requirement, and there is currently no legislation pending to remove this requirement. However, this year, taxpayers eligible for storm-related disaster postponements have until October 16, 2023 to make the 2023 prepayment. This is a huge benefit because the taxpayer's return for the tax year is also due October 16th, meaning that the pass-through entity should be able to accurately determine the amount of tax due and will be far less likely to underestimate the 50% amount due for the prepayment. Regarding the postponement of the estimated LLC gross receipts fee, normally if an LLC doesn't pay by June 15th, or if the estimated fee is less than the amount actually owed, a 10% underpayment penalty is assessed. For taxpayers in affected counties, the 2023 gross receipts fee can be paid by October 16th, giving these entities more breathing room to estimate the fee. We've been covering the pass-through entity elective tax in Spidell's California tax letter, and you can see a list of benefits of this monthly subscription and download a sample issue at caltax.com under publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.